CTM, what's going on, everyone? I hope you're well and doing great on this Tuesday, kicking off September over here. Yesterday, Labor Day, equity markets closed today under pressure. Nasdaq actually coming right into our green line right now. This is the breakdown of this. A close below this for us would be the first technical breakdown. Now, I wouldn't say that it would be unexpected, something that we were looking for as we move towards what is an unfavorable weakness, right? At a time when the Treasury General Account is actually also being raised, that is for sure a headwind for liquidity. Putting the two together, and are we seeing a lot of what was expected, or are we seeing the top being put in real time? Now, um, first of all, how's it going, everyone? If we see any of like fluttering going on with the stream, please let me know. I did a restart yesterday. We got the fiber being put in today. Heavy Air said it's probably not the internet connection though, and it probably had either to do with just needing a restart, maybe a GPU reconfig, which I hope it's not that. Nevertheless, let me know. I'm hoping that we're good to go today. I think so, Ace. Not only that, I think that it would be more than appropriate if we were to get a test of not only the previous high over here after breaking out, we had a quick retest, and then a test of this and or below it. I was speaking to a friend over the weekend. He had done some back testing work, just manual back testing of the index S&P 500 going back the last 100 years. And he looked at rough sketches here. He looked at 13 or 16 different occasions, and like 85% of the time we saw the market come back and retest the previous breakout, and most of the time it's not just a retest. Most of the time trades under the previous high before being able to find its footing and resume out. Just a quick note from where the all-time high is, and from here we're looking at a 4% correction, which very much aligns with the seasonalities into that previous all-time high breakout. We're looking at 7.5%. It's not even really a correction on the Nasdaq. That is, I think, between now and let's say not just September, because we're looking post-election year. We're looking at weakness through October as well. Between now and the next 2 months, I would say that there is more than a strong chance that we get to test this area and likely below. And if all that's happening, that's just right on time, no doubt about it. I think it would be interesting personally if we were to go ahead and maybe sweep this wick down over here. You could see these wicks down over here into the red zone. That would be roughly a 15% correction, 15% correction. And that's what my friend had told me that he found to be on the S&P 500, not on the Nasdaq, what around the mean correction was after going ahead and back testing that all-time high. So look, if any of this were to happen, I think that's well within reason. And what I want to watch out for now, though, is if we first of all get this breakdown today, like if we close below the green line, that's a technical breakdown that we've been watching. If that were to occur, then the next thing that we're going to be looking for is when's the first repair to negate that, right? And expectations were that this is the next zone that we would be looking for on a close below here. Haven't closed below there yet, but it's definitely in play. What's really interesting is to see CTM positioning throughout all of this, and to go so quickly into this is our last open position. If you look here, Bitcoin bull runs has recently exited the market, and of course, no one wants to see that, right? And I just want to make it clear, regardless of what my own personal beliefs are, and I'm going to for sure continue to break that down each and every session. And the bears in the back, that's just for fun. Don't let that scare you. That's not like, I don't think that we've entered the bear market, which I could very well be wrong. I I don't think so. And we're gonna continue just look at about a lot of people. I feel like they know what's going to happen. They're like very adamant they know what's going to happen. And then when I look back of what they thought was going to happen, it's never right. I don't know how they do it, but they're nevertheless they're very sure. I'm not sure what happened. I have my ideas and I have my beliefs, and one of them for very clearly is that the 2000 the cycle peak in Bitcoin for this particular cycle, measuring cycle from halvings. And yeah, I think measuring cycle from halvings is a very poor way to do it, but that's what we've done up in the past because of the 4-year cycle, because of what we were looking at as far as the impact of the halving of the miner's reward. Obviously, that's no longer relevant at this state of the market, but measuring from having to having, my own personal belief is that the high of this cycle, and this was initially done to like, first of all, throw out an opposing opinion that I thought was correct compared to other, people were saying this is going to be a left translated cycle, meaning that the cycle high was going to come very close to the 2024 halving. I said, no, that's not going to happen. And, now obviously 4-year cycle, that's like we're in that window, September, October, 4-year cycle peak. A lot of people looking for that peak. And I'm like, no, I don't think so. I think that we're going to see that high continue to be closer to the 2028 halving than the 2024. Now, what happens in 2026 is something that obviously we have to very closely monitor, in so much as that a lot of people have the expectation that indeed that we are going to see a rolling over of the liquidity cycle. So that's something that we definitely want, well, that I definitely want to continue to monitor, because for me it's not a question of being correct in so much as did my broader longer term view actually work out as I expected. The most important thing for me is to be able to stay on the right side and pivot as quickly as possible, right? That's the most important thing to me. So I have to watch for that. But again, and I spent some time over the weekend taking a look at those particular views, specifically the liquidity cycle and cross-border capital. Michael Howell does a really good job in presenting what he believes his view is that. And one thing I found interesting was that he's discounting Chinese liquidity when he's looking for the coming peak at some point into 2026, which again, if he were to be correct, and from what I understand, Luke, aka Lucastis, said that he did in November 2022. He was looking for the bottom of that liquidity cycle and for liquidity coming to market. I know that we were able, from just a technical standpoint, to be able to call the bull market breakout, and then shortly after in January, like close our eyes and get on the right side of the Nasdaq. And if you remember that everyone was so macro bearish at that particular point in time, and I was, but I was like, close my eyes. I have to follow the technicals and stay on the right side. And then shortly thereafter in March, we called, well, if this next, we're looking at the Nasdaq right now as far as breakdowns. This was repairs going the other way. So, well, if this one triggers, that could be a waterfall. Sure enough, Nasdaq melted up around the time Dr. Michael Burry was like telling everyone out there to sell. But the reason I bring it up, like, follow those with the history of getting right. I didn't see it in real time, but Luke said that cross-border capital was calling for that turn in the liquidity cycle here. He's now calling for another turn. You saw the flicker? Ace. Ace, is it real, or are you seeing things? Uh that's unfortunate. You know what I wonder if it is the whole running the Zoom screen over here that's causing it as well. That's my own thoughts. If you guys do see it today, well, we're gonna run it the same tomorrow, only because tomorrow we'll have the fiber. I know that's probably not it, but we're gonna check it out anyway. And then if we're still seeing it today, also tomorrow with the fiber, then we'll just actually try one session without the video, and we'll see if that corrects it, and then we'll know whether or not that's what's causing it or not. And then we'll continue. You guys are a smart bunch. I know we'll figure it all out. You guys are seeing the flicker. Yeah, I don't want to shut the meeting. I like being able to see you guys. Well, you can't see you guys. You can see me. It's all good. Um, Positioning is what I was starting this off as. I'm gonna come right back to the liquidity in 1 second. In so much as that it's absolutely phenomenal. No one likes seeing Bitcoin bull runs exit the market, but to see how quickly from CTM has gone fully positioned into all of a sudden now fully out of the market except for T triple Q is actually phenomenal. Phenomenal to act so quickly. And you could see that at the close of today, right now, we have a pending close for T triple Q, which means tomorrow morning the exit will happen if confirmed at the end of today's session. Average gain on the upside, I believe, is 28%. It looks like just an average take for T triple Q as far as this trade. Nevertheless, that would be day 4. We'll figure. I'll have to turn. um, I'm trying to tie all that in, right? By the way, you could see that right now price on Bitcoin is higher than the exit on Bitcoin bull runs, but we're still looking at 2 CTM filter and also the JV filter, keeping us out here of taking a re-entry at this particular point in time. This could flip back and forth. Just because Bitcoin bull runs has exited the market does not mean that we're not going to go back and forth here and re-engage on the upside or just stay out of the market for some time. The win rate on Bitcoin bull runs is extremely low. The lowest of any model we do 20%. That means 1 out of every 5 trades that are taken, you expect to stop out. Now, the risk to reward is phenomenal. Risk to reward on this particular template, roughly 400 to 1. And by the way, because we're getting close to the V4 release and a lot of work continues to be done still. So specifically in the last, since we last caught up on Bitcoin itself and on Cardano, but we continue to make that enormous progress and effort. That's also out of the market right now as well. So even from like something that outperforms even finding the bottom to the top, that's also out of the market right now. That's the correct position to be. And we are obviously very closely following what happens. And right now you could see momentum not only in the equity markets, but across Bitcoin and crypto has definitely taken a turn. And we are positioned absolutely accordingly. We could be 100% into cash tomorrow morning. That would be phenomenal as we are into this period of, we'll just call uncertainty, or I'll call uncertainty right now. And that's because we are looking at, obviously, the potential technical breakdown about to occur on the Nasdaq. And then we're looking at, obviously, just weak seasonals through September and October. And just because they're weak doesn't mean that is what is going to happen. And by the way, I gave what I deem to be like the worst case scenarios that is going to, it doesn't mean that we're even going to lose this green trend line and have the first technical breakdown. And just like as a reminder, if you looked at what happened in 1998, which is just happens to be a path that we've been tracking very tightly for 2.5 years, and it doesn't mean it's going to continue. Is it a guide of sorts? I mean, it's the closest path that we have to follow. It didn't even take out its August low. It consolidated over here in about a 5% range, which is close to what we've been in so far ourselves. But it didn't even take out its low. So I wonder, we have our August low down all the way over here. Let's go ahead and take a look on the Nasdaq where that looks like as far as the August low coming in down over here. And just pointing out, in 1998, it didn't even take that out. And if it doesn't, if we got through September and October without taking out the lows and I would have to probably assume that's a very bullish, like factor. On Bitcoin, we looked at that in last week, and we looked at that from the buy and sell between the very bottom, January 2023, and then we were looking at it last week when Bitcoin was even a little higher than it is today. Bitcoin, obviously, nice to see it green so far on today's session. On the buy and sell side, it was during the bull market on the buy and sell side, it was tremendously outperforming. And on the buy side only, it was also outperforming. So just the buy side left, it was, I mean, absolutely phenomenal. We could look at that perhaps tomorrow together if need be. But yeah, that's absolutely insane. So, watching to see whether or not we close above or below the green line today and for follow through into tomorrow's session. As far as the calendar this week, obviously, my eyes are on Friday's non farm payroll, but we have, including tomorrow, we have JOLTS numbers, we have, you know, employment numbers all week long. A lot of eyes might be on what's happening over in Europe, the situation that is evolving as far as the solvency, I'll say, of France, and then the war rhetoric, France telling its citizens that they need to kind of go ahead and make sure their hospitals are able to accommodate perhaps up to 50,000 wounded at a time, as they might be looking to, you know, look over here. And anyway, I don't want to talk about that nonsense. Pray for peace. Pray for peace. So let's begin. Let's get into it. By the way, the TGA right over here is getting close to getting filled, which is important, but that's not the end of it. It's not just the TGA, obviously. Right now, through all of September, the amount of new issuances being put onto the market by the Treasury is accelerated, and then that stops at the end of the month. In October, it's expected to be very, very light, and you can see they just keep throwing up all these bills over here. 100 billion on 4-week paper. Oof. Bonds right now just continue to coil here. 10-year continuing to coil. No read on that whatsoever right now. I wanted to take a look at this chart over here of Ethereum. And we saw, first of all, we had that all-time high occurring. Was it a liquidity grab? We've had a sell impulse since. And, you know, that's bearish. We talked about as long as we're above the yellow line, that previous breakout, you can see that that's a trend line breakout over here. That's still structurally very bullish, and any type of consolidation after that mega run up is completely welcomed. Nevertheless, it's holding in there pretty well so far as on the sell impulse. And I know that we have that weird wick. Let me go ahead and make this brighter so we could see, so I could see, so you could see, we could follow along. And this is just what we're watching here right now. As far as the upside, it's wicky over here, I know. And of course we had that all-time high, but I'm just waiting for the next buy impulse, what would be a repair to occur on a breakout above. Wouldn't be surprised if we come in and we fall into this zone of a retest. Actually very bullish if we do. Not much of a read. Gold continues its absolutely magnificent ascent. We are looking at gold being the most overbought it's ever been in history. Something's different. There's no doubt about it. And we are seeing gold being repriced in real time. Look at, unbelievable to see. This might have had a lot to do with it. Do y'all hear that Brazil has called for like an emergency BRICS virtual summit in response to the United States' tariffs and use? You saw that over the last few days in China, both Putin and the Prime Minister of India someone please remind me of his name. I don't even know what render settings are. I'm gonna have to do some research and figure that out, Ace. What's going on? Sorry about the flickering, everyone. Um, Craig, as far as buying, the bottom and selling the top, that's not what we do, right? We're looking at being able to outperform if someone was able to buy the bottom and sell the top. As far as I know, no one out there could do that. Uh, as far as I know, no one could do that. Now, I could say that, you know, we have a pretty good track record, but even going back to last cycle and the first de-risk of 53,000, I didn't know that that was the top end or the first technical breakdown, the de-risk, pay off all your loans, stop trade, take prop, that was going to be the last until we had 35,000 all break down. I don't know of anyone who's able to call the bottom and the top. We were able to call the bull market breakout at 17,250, but it didn't mean it wouldn't be invalidated. It hasn't yet, but no one could buy the bottom and sell the top. And why Bitcoin bull runs is pretty good at being able to hold for an extended period of time. The new V4 the new V4 release, it's outperforming Bitcoin bull runs. So that's what we look to go for. Looking great here. Right now we're looking at foreign central banks holding more gold than US Treasuries. And yeah, that's a big deal. There's no question about it. That look at them divesting ever since the and then that's a major thing. Silver above 40, that is absolutely epic, a major thing. And a lot of people, watch out if silver starts running, that could signal the end of this Bitcoin, of this bull super cycle run, but it's a super cycle. It's just getting started, from my opinion. And when you look at the major fundamentals of what's changing, India. So the Prime Minister of India was also now like, look what the U.S. has done. The U.S. is good at making people make friends, and he's pushed. He said the President Trump pushed together India and China, and China, I mean, India's response is also divesting of further US treasuries and buying more gold. And, you could see it obviously. There's a reason that we're seeing these things take place. And that is very clear. Yeah. I thought we were going to get a deeper correction here. So when we started the first correction, like I was hoping we got as far as the whole number. And I didn't think we would stop at 3,000. I thought it would probably go a little bit under. This was the extent. This is, I mean, that's why you got to follow the technicals, and you have to stay on the right side, regardless of what you think is going to happen. And this is just a mega classic example now of overbought can remain overbought than most people expect. And, it doesn't happen often. It's very rare when overbought remains overbought for an extended period of time, or oversold remains oversold, but it could happen. And when it does, it's brutal. That's when you say that, markets can remain irrational longer than traders can remain solvent. I don't think there's anything irrational about the gold move that's taking place at all. I think it's for sure a sign of we're seeing that. I mean, we're seeing obviously the pace of worldwide debt continuing to accelerate, and we're seeing obviously here hard money being priced appropriately because of it. You could see the fundamentals in play right now. And this also is the reason why we're seeing the move in the effectiveness of monetary policy And now what's becoming apparent, the fiscal policy, and you can see it over here. Like the Fed engaged on its most aggressive tightening cycle. Rate shock, we called it in 2021 coming. And it was a rate shock, but even with these elevated rates, you could see the markets, they haven't cared. And what's happening now is the Fed is actually potentially, oh, the 9th of September is a mega date that we have to have on our minds. The reason it's a mega date, we're looking at jobs numbers this week. That's not even as important as what happens the week after. The week after, we have the revisions coming in. And the revisions will be on the 9th of September. And, there's nothing else out on the calendar. And that likely is going to have a significant effect on what happens at the September meeting, whether or not they're going to cut or not. Now, we'll find out which way these jobs are revised, and we'll find out what the numbers say. But a year ago, that's what led to giving the Fed cover to go ahead and cut that 50 basis points. So that's something for us to watch out for. Uh, so there, like Hunter, when we talk about QE, it's really important for us to talk about what type of QE. So if the balance sheet starts going up, right now the balance sheet is contracting. Here's also obviously another clue that monetary policy is just simply not having the effect it's had in the past. And the balance sheet is running down, and risk has been 2.5 years just aggressively running up, aggressively running up. Only three other times in history as the S&P 500 have back-to-back 20% plus gains. And why that's happening, if the balance sheet starts going up, why it's not QE as far as outright purchases of securities, it's still QE. It's QE by another name, and it's an aggressive, let's say, current for risk, from my opinion. And that's always what I expected is going to happen, is that, and they could pause it when they stop QT, they could just pause the balance sheet. That should be conducive to risk. Don't forget, many people think that this cycle is about to end. Bitcoiners think that it's about to end in September, October, 4-year cycle. And then you have some people out there who are focused on liquidity cycles, saying, well, into September, it's going to take a turn. One thing I found interesting, though, was that cross-border capital was not including Chinese liquidity into their model. And right now, obviously, Chinese liquidity is on the rise. And I think that is extremely, extremely important to consider. So does gold spike before QE is coming? I think that you're seeing gold spike here. Probably because of actual increased buying coming out of China and also India. And I think this is simple supply and demand. I don't think it has anything to do with what's going or taking place with Jay Powell and the Federal Reserve. I think that this has a lot to do with just geopolitical changes, and people are obviously not happy with the US's weaponization of the dollar. They've been divesting of US treasuries. That's accelerating, and you can see the massive change occurring. That's incredible, and I think this is just simple people buying gold. I would not be surprised if at some point, uh, call it, in the next year, that actually the US does go ahead and revalue their gold holdings. And at the same time, you did see an actual audit of Fort Knox confirming that that gold is there. And even if there's an audit and to confirm it, like, you have to trust the audit is the whole thing. If the gold's there or not is even irrelevant to if they do an audit, right? Because, trust me, bro. But likely the US does go ahead and do those two things. I believe that's in play and that's going to happen. And when that happens, that likely puts a further floor into the price of gold. And that's not the end of the bull market. And why there could be corrections in between, we haven't seen any. If we have any type of liquidity event, there's likely going to be a big correction in gold. If we have a recession, there's likely going to be a correction in gold. Now, it doesn't appear that we're headed towards either one of those things at this particular moment. Now, that doesn't mean it's not going to happen in 2026. It could happen, but right now, nothing suggests that a liquidity crisis is close and or that a recession is as well. Now, again, right now, nothing suggests that or either one of those things. Um, when when interest rates go up, that in the past has been a fantastic buy signal for gold, except for this particular time. And this particular time over here, we have March 2000 right here. This is when the interest rates went up, and then you saw gold have a legit correction. And like my bad on the analysis there was that this time what was different, it's always something different, but this time what was different was inflation. And gold didn't bottom until inflation peaked and then rolled over. And right here is when it started rolling over the disinflationary forces. Right here is when it started. So even though they were raising rates, uh you know I didn't factor in the inflationary forces and what it meant as far as gold. And it's so important because next time cycles do repeat, cycles are similar, cycles are different, but the next time this happens, that I want to be a lot more aware of that. I don't really know what as far as what they could do if they declare a housing crisis. I mean, what could maybe they could build more houses? I don't know. I do think that the housing market, from my unexpertise opinion, is definitely continuing to soft. There's less sales, less transactions taking place. There's more supply out on the market, and that continue. I think a year from now, it's likely worse than it is today. I think that could provide some, as I look out and I say inflation is going to be a problem, assuming that they're able to actually engineer that growth and run it hot. You can see it over here. The GDP right now, the forecast is estimated above 3%. I saw on their website September 2nd is today. They are forecasting 3%. That's up from 2.5% last week. Over here, Trading Views data is saying they're estimating at 3.47. Nevertheless, I mean, and then we all know that they're looking at putting GDP on the blockchain, and they would like to. If you saw Secretary um, Lutnick's interview on the All In podcast about many months ago, like they would like to redefine GDP. So it's all fugazi, right? And if they're going to redefine GDP, whatever that means and however they're going to do it, like, anyway, this is what we have to deal with today. Today, a lot of people are not trusting the data. They're not trusting the data, and I don't understand that because we've never trusted it. We remember going back into 2024, the all year long, we're like, this is not correct, this is not right. It's all we have to work on. And then we had in September all of those revisions actually showing we were right. The data is not correct. But as it is in real time, depending on whatever the release is, that's what the market reacts off of. Doesn't matter if it's real or not. That's what the market reacts. The market's not saying, well, this is not real and it should be like this. That's not how the game works. Um, Extremely proud of our positioning right now, as we are all but 100% into cash at a time that rightfully we should be, right? There's a bit of uncertainty in the market. We're waiting, we're watching, and the next impulse up or down, we'll be able to grab it. So I'm watching closely over here about what's taking place. And let me go ahead and just 1 second, set up a reminder over here. That matters. Are they cutting into weakness, or are they cutting into to strength, normalization or recession? I want to pull something up here for you so we can continue this conversation. I'm looking here for the right slide. I'll go with this one over here, and um, we're going to start over here. So last week we were talking about the curve. How in the past we've seen on average, after the curve has inverted, a recession 16 months later. This time, it's been a long time. We have not yet hit that recession. There's no recession yet on the horizon, and it looks like it's going to be wrong. Now, could this be different? What is different this time? And I think this is very important when we talk about the liquidity cycle. A lot of people talk about the government refinancing every 4 years. That actually, it's different over these last few years. As far as right now, what's happening is that they are looking at short-term duration, and that's where all the rollover is happening. That is definitely changing the liquidity cycle, and we're seeing a lot more of that fiscal dominance coming into play. Could rolling over that short-term paper have had an effect on the yield curve? Funnily enough, the person who invented the indicator, he said in real time when it inverted, now this time is wrong. This is not correct. Was he right? Look, I lean towards that camp, that this time is different in so much as monetary policy is having less of an effect, fiscal dominance is having more of an effect. We're at a particular point in time where right now we're seeing potentially even monetary policy now move towards easing. A lot of people are concerned when that happens, when we see cuts coming into the market. That's usually when markets crash. Yes, half the time when they're cutting into weakness. It doesn't seem that's the direction we're headed. And we saw in Bitcoin We Trust go ahead and pick up off of just the work we were looking at on the, or not even the work, just checking in on the yield curve, and it inspired him to take a look at what's happened in the past. And he looks at over here, you can see this trend line of the 10 to 2 spread, and he points to that there have been times when you've seen that reinversion occur, particularly in this area, where you've seen then the curve come towards the resistance, and that's usually the peak of the cycle. And sure enough, you're seeing some similarities occur right now. Like, I throw out there to him specifically, is this time different? If you have to be so careful with like Grok or ChatGPT in like the way you ask questions and what you ask them, because they're like, oh, you're so smart, I can't believe you. You have to be very careful. But if you ask it in a very neutral tone, something to the effect is like, is it possible that the treasury rolling over short-term duration has had an effect on the yield curve? And then, sure enough, like if you could pose the question in the most neutral way possible, and then look for some type of data and research to go over. I mean, everything suggests that the reason that this time is indeed different is again because of what is taking place as far as the duration of the rollover, and it points definitely to a much more greater significance that the Treasury has on the market right now. Yeah, again, I don't want to be like this time is different. I defer to Lynn. Lynn Alden was like, is this time different? She's like, no, it's not different than the last time in the 40s that fiscal dominance became paramount. It's not different. Is it different than what we've been accustomed to in the last 60 years and the importance of monetary policy? Yes, that's different, but it's not different. It's the same. And again, that's just the camp that I'm in. I see these differences, and again, this is different. We look at gold and we're like, that's different. Oh, one thing that I do want to point to though, in regard to this and the yield curve, and you know, I personally think, and this is to inspire, my greatest takeaway from this, me looking at the yield curve really had nothing to do with any of the work that in Bitcoin We Trust put together as far as his correlations and analysts, um, at all. That's all on him. He did fantastic work, like a great job. Now, I am suggesting, and you could see here that potentially this would peak towards. Let's go ahead and take a look at it from my perspective. And if you were to, continue this ascent up, yeah, I mean that puts you into 2026 anyway. I suppose you could go like this and say, well, what happens if you have this zone? So, hey, are we right towards that September October top? Right? Like something to watch. And then maybe we don't top in September, October, and it gets pushed for a little further out into 2026. Many people believe that's also what's going to happen. Now, the reason I always say that the cycle peak will be closer to 2028 having than 2024, well, a lot could happen in between. And that's what we're watching for. And a pivotal moment to be watching for that is when the Fed begins cutting, obviously. That's a very important inflection point. Here's another potential vantage point to say to you, hey, maybe I should be watching over here. But listen, just because this is resistance, or has been resistance, I should say, ever since the birth of QE, that doesn't mean, and you guys all seen all the time where you could get a break above it, but it might only be just one deviation up, and then you could get a top, right? And then we have one touch trend line, you move it up next time around. That's has carries relevance or not. Like maybe like, is this time different as far as the bond market has moved towards a secular bear market? Yeah, I believe everyone is in agreement with that. Now, the disagreement is some people believe we're going to have one more chance to get towards the zero bound, and there's going to be a crisis, and that crisis is going to allow for the Fed to momentarily be able to drop rates close to zero. And that could happen. And I personally believe if there is a crisis that requires QE, that they have to take it down as close as possible. That's because that's what the Fed themselves have said. Ben Bernanke said it in 2012 or 2013, referring to the first use of QE. And then Powell, over the past year, has reiterated that as well. If the Fed returns to QE at any point in time, they need to have rates as close to zero as possible to make it effective. So I believe that could happen, but I also don't see personally an imminent liquidity crisis that's going to cause the Fed to have to return to. Actually, what I think happens next is that they extend the cycle as long as possible. What does that mean? Well, obviously they're going to stop QT. Likely they begin that organic balance sheet expansion and then cutting rates down. This is going to extend the cycle, from my view, further out, right? And how long that is, that's anyone's guess, but usually it's a lot longer than people expect. So there's people that believe that, like, very soon we're gonna get an event that is gonna cause rates to come down towards zero, blah blah. And then there are others who think that's not gonna happen again. That was 2020. If you missed it, it's gone. And either one of those could be correct, but I think everyone agrees that we've entered into a secular bear market, and now you're seeing um, a lot more focus on the short end of the curve, right? So is that different? I do think that's different, right? Does that mean it's not going to rhyme and that we're not going to see a top in September, October, or into 2026? I think it's fantastic work, and I think we should be aware of it. I think one thing that likely is more important, or has been, is monetary base total. A lot of people focus on M2, right? Global M2, and they're like, it's going up, and here's a 12-week offset, and because it's going up, like we're going to continue to see risk assets go up, and that works well until it doesn't. But every time here you could see M2 peaking, Bitcoin's off 60%. Global M2 peaking. Here you could see global M2 peaking over here. Bitcoin's off 40%. It doesn't work, and it's not helpful at best, right? It's a poor indicator at best. What is a good indicator, though, or a better indicator, is monetary base total. And you could see here's where it started going out, right? Here's where it peaked over here, and then here's where it started going out. And it's a much better, and it's not as late as M2. You can see over here as well in November 2021. Here's where it peaked and started going out, right? You could see the brief peak that happened over here in February or into March. And then you can see that major consolidation before it started to go. I think it's better. I think that, being that in Bitcoin We Trust had the awesome ability just to take a simple observation about the yield curve and then make it into something that may have significant relevance. You know, I'm just planting seeds to take it even further. And one thing that I think that's also important, and he talks about, all of the ICOs that took place that cycle, but that had to do with the run of altcoins. That didn't have really, I don't believe, had to do with the run of Bitcoin. Um, maybe it contributed, but you could see here that the yield curve wasn't even rising. Into the peak it was rising, into the peak it was rising, into the peak it was rising. It's falling throughout this whole run over here. So I mean, it's noted, but I think that, a greater degree, because you're only dealing with a few data points. Bitcoin's only been around here, uh, you know, for a little over a decade. But you have to ask, well, what was happening here where that wasn't a factor in that cycle? And is it indeed simply because of the advent of ICOs? This is what the way I see it. Um, I think there's more. I think the problem becomes what happens if, and I don't know that this is going to happen. I think a lot of people are concerned about what happens if the Fed begins lowering rates, and what happens to um, the bond market. And I've said the 10-year, that's a little tough, you know, but I mean the 20 and 30-year, Fed begins lowering rates. Are they going higher? Is the market going to be pricing in that the cost of inflation? I think so. I think the 10-year could go. It's a little bit more of a guess. It could go either way. Um, but I think that's the concern here, is what happens. And just because it happened a year ago when they cut, that we saw 10, 20, 30-year rise, it doesn't mean it will happen again. The market's in a different state, and right now you could look at the turn that's taking place in European bonds. And you know I've been hearing a lot of people being like, the US is not the cleanest shirt out there, and pointing to the German 10-year, but now the German and all of European bonds have just taken a sharp turn. And you don't know, like, where we are today is different where we're going to be 6 months from now and 12 months from now. I'm not convinced. I want to see when the Fed cuts, what happens to the 10, 20, and 30 year yield. Are they going to sell off, or are they going to actually go bid? I think those are unknown. I think those are all important. No flickering on the catch up. How bad was the flickering today? I think it has. I think Powell's doing some type of DOS attack. Actually, that could be. So, and let's be clear when we talk about extended cycle, like 2026, we're calling it, like, you know, doesn't mean it'll be that's in front of us, right? Coming up, right? We're getting in now into September and the end of the year. Um, we're gonna take it as it comes. You know that we're watching what happens. We know our positioning is just going now into 100% cash. That's significant, right? And regardless of what our thoughts are, we're gonna be positioned on the right side. That is the most important. Amazing to see that type of maneuvering, and I hope by the end of October, I hope into November and December that equity markets are continuing to rally into the end of the year. That's my belief of what's going to happen. I think one thing that I want to bring up over here, and it's just we get to look at things together. You can't really trust in one or the other. Oh, by the way, let's look at this one. I'm going to come back to this. That's not a good look over here. We looked at what could be the Jesse Livermore accumulation channel taking place on Bitcoin, right? And we looked at it together. What happens if this was the accumulation channel that occurred throughout 2023, right? That I don't think this is happening actually, but it could be. I I'll keep this up. We'll look at that maybe tomorrow. I think you should be prepared for everything. It still gets worse when we're going through the other channels. You said it could be the rendering, and I also changed Ace, by the way, the settings inside the stream. The rates per second or whatever it is, and I lowered them. That didn't change it. Um, when you say rendering of what? I'll look into that as soon as I get off here. Um, the VIX I wanted to look at in relation to this. So here, some data is being pulled up that's suggesting that, listen, because a lot of people obviously are very concerned today, and maybe rightfully so. I'm under the impression that we're seeing seasonalities being seasonalities. I'm watching. We're waiting for YouTube. I look. I would so much. You know what, guys? If we had the opportunity going forward to be able to have more of time to accumulate Bitcoin, I think that behooves everybody. Now there are some people, older people who maybe don't have that type of time and whatnot, and for sure. But if imagine that there's going to be over the next 5 to 7 years a 10x in Bitcoin, and you're going to see $1 million Bitcoin. And I think that those expectations are well within what the outcome is going to be. We look at things and we say, look, you might not have, and I do not believe past May, a year from now, 2 years from now, sorry, that you have the opportunity to accumulate Bitcoin under $110,000. I hope that's right. If you're looking at it from this angle, where we haven't seen Bitcoin yet in the last 13 years trade under this particular trend line, that would suggest that you have only a year from now to potentially accumulate Bitcoin under there. That is the piece where I think this 4 year cycle and bear market coming into 2026, if it doesn't occur like that, that's where a lot of people unfortunately get left behind. And that is what I think the biggest risk is out there. I don't think it's a risk if we get a pretty strong correction. Here's the sustainable channel. When I called the Bitcoin bull market 17,250, the only invalidation has been this trend line. It continues not to be invalidated. If that's invalidated and breaks down, I think that's a big deal. If that happens, I think there's a strong chance we could be testing into this line down over here. Those things haven't happened yet. 100% into cash after. So Bitcoin and crypto are now 100% in cash. We went from a few weeks ago, what there was, except for Tesla, Bitcoin, equity markets, and crypto in the market, and we've wound down position since. And now, yeah, yeah, I speak Spanish. Um, yeah, here's where we are. All right, Simon, I'm going to take a screenshot of that and troubleshoot that. Listen, this is our Tuesday. It's our Monday as we're back after taking off yesterday's Labor Day. The conversation continues. Everyone, thanks for being here today. I enjoyed it. I hope you did as well. If you did on the way out, definitely hit the thumbs up. And I'll see you all tomorrow. God bless you all.